Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ, with daily insight on the NASDAQ 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the NASDAQ stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Sean Cruz, Manager of Trader Services at TD Ameritrade, to discuss levels in the NASDAQ 100 and Vol Q, as well as a review on earnings and a preview of Amazon. Sean, we have a lot to get through. Welcome back to Trade Talks. Let's start with your fresh levels being watched in Vol Q and the NASDAQ 100.
Yeah, it was interesting to see. We got a little bit of distress coming to the markets last week. There's a lot of uncertainty out there. And you did see a pretty sharp pullback across a lot of the major indices, but it almost snapped back just as fast. And even as fast as we saw Vol Q start to move higher, along with all the other major measures of volatility or uncertainty, it's really come right back down to earth here in the session, particularly in today. So I think that really shows that was really just some near-term jitters. Everyone wasn't sure exactly what was going to happen. If a lot of what we saw going on in the market was really going to become a little bit more systemic in terms of just equity markets, but it ended up not being the case. I think as we get further away from that, markets are feeling a little bit more optimistic about the outlook and any sort of near-term issues, and are now ready to focus back on earnings. And if you take a look, the 20-day moving average was something that I was looking at. We did breach that the other day, but we kind of popped right back above that. And even when we have seen this trend higher and the uptrend continues to appear to be in place, at least for the time being, we have briefly breached that 20-day moving average, but usually that does not last long, and we move right back through it, and we sort of resume that march higher. So that's why I said I think for the time being, that's something that you could maybe just keep an eye on to see if maybe this longer term trend is going to remain intact, or if maybe we are going to see a more pronounced pullback. But looking at Vol Q today, looking at what's going on with the averages, I just don't really see that being in the cards, at least right now for the time being. If we do get a pullback here and looking at maybe some of the more near-term price levels, there's a few that I think are a little bit more pronounced. 13,395 is pretty strong. There's a little bit more soft support level, potentially at 13,275. And then we have another pretty significant price level that could serve as support down at 13,155. So I think right now, I don't have any reason to believe that we're going to have a complete pullback in any of these markets. But if we do, I think there's some support levels, not only on the moving average standpoint, but just also some other areas that had been sort of more near-term support or resistance previously that could come out and maybe become a little bit of a price point for us to stabilize around if we do get some sort of a pullback here.
And Sean, if we take a look at earnings, how have they performed so far for this, Q4?
So we've heard it from about 34 of the 100 NASDAQ 100 companies, and by and large, we've had sales growth of about 14.25%, earnings growth almost 24%, and that's certainly been led in healthcare, information technology, communication services. I was actually a little surprised to see that healthcare was actually leading the way in the earnings growth standpoint with 33%. I actually would have expected information technology or communication services to actually be in that number one spot. But certainly I think it's nice to see that you're not just seeing earnings growth focused and strong in one sector like information technology or communication services, but you're also seeing it spread to some of the other sectors as well. I actually think that's actually a pretty good sign for the underpinnings of the market moving forward.
All right, and let's wrap up quickly. We have Amazon to preview.
Yeah, that's the big one. And so I talked about some that we've heard from 34 of the 100 companies. Consumer discretionary, we've only heard from 2 of the 15 that are out there. So it is going to be interesting to look and see what we hear from Amazon. Right now, markets are pricing in about $160 price range for Amazon to move post earnings. That's either on the up or the downside. So about a pretty significant $320 range for it to trade in tomorrow once we get some more trading activity after we get earnings out tonight. I think there's going to be a lot of focus on what happened last quarter. We had Amazon Prime Day and the holiday shopping season in the same quarter. Amazon Web Services is expected to post some pretty strong growth numbers as well. I think there's going to be a few things around how much of a cost expense they had to they had to pay out because they talked about having to up compensation to employees, had to invest in more distribution centers. I think those are going to be some things that they're going to want to see, one, what happened with that last quarter, but also maybe get some updated outlook for what they can expect from on the expense standpoint for the rest of the year. So definitely going to be a lot to watch. And I certainly think that can be a pretty big event for the market, just given the size of Amazon and their weighting in so many of the major indices.
Great point, Sean. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Hey, Will.